How many of you have taken a loan? Or maybe you're thinking about to take one. What if I told you that a single mistake with loans could trap you in years of financial stress? What if I told you that banks and financial companies have designed legal traps that make you pay way more than you should? In India, more than 50% of the middle class families are stuck in loans they can barely afford. Personal loans, let it be credit card EMIs, home loans, and whatnot. And most of them don't even realize the mistake they have made until it's too late. But don't worry, by the end of this video, you will understand the biggest loan traps that people fall for and how you can protect yourself and your family from them. This is not just financial advice. This is about making sure your hard-earned money stays where it belongs, and that's with you. Stay till the end because I'll share some of the real-life examples and simple strategies to avoid these traps. Trust me, you'll thank yourself for watching this. The first one, that's the 0% interest trap. Tell me honestly, have you ever bought something on 0% EMI thinking you got a great deal? From any electronic store? What if I told you that 0% EMI is one of the biggest marketing scams out there? Imagine you buy a smartphone for 50,000 on 0% EMI. You're happy, right? But here's the catch and what actually happens. The story has begun from where the store already increased the price for the phone for EMI buyers. If you paid in full, you could have gotten the same phone for 40,000 or maybe 45,000. The bank still makes money through processing fees, insurance, add-ons, and many other hidden charges. Even if you pay every EMI on time, you still end up paying more than someone who buys it in cash. And what's the solution? Always compare the total amount payable versus the upfront price. If the difference is too high, pay in full if possible. The second one, that's the credit card EMI, and that's the silent killer. This one is a slow poison. A credit card is convenient, but it's also one of the most expensive ways to borrow money. Let's say you spend 1 lakh on your credit card and convert it into EMIs. You think there's no big deal, I'll pay slowly, but did you check the interest rate? At 30% annual interest rate, you end up paying almost 2,19,700 instead of 1 lakh in 3 years. At 42% interest rate per annum, you end up paying more than 2,87,000 instead of 1 lakh in 3 years. Tell me, would you ever take a personal loan at a 42% interest rate? No, right? Then why do it through a credit card? And what's the solution for this? See, always clear your credit card bill in full. If you take a loan, opt for a personal loan instead. It's usually cheaper than your credit card EMI. The third one, that's the easy personal loan trap. Nowadays, personal loans are available in just 5 minutes through many apps, fintech companies, and banks as well. Everyone is offering them, but at what cost? A friend of mine took 1 lakh rupee personal loan from an app. The interest rate was 24% per annum. Sounds normal, right? But after 5 years, he realized he paid 2.98 lakhs, that is almost 3 lakhs, and 2 lakh was extra gone into the interest. What's the biggest issue? Many people don't even read the loan agreement, hidden processing fees, high penalties for late payments, auto debit frauds. These are common. And what's the solution? Always compare personal loan rates before applying. Avoid loans from unknown apps or lenders. Many of them charge hidden fees. If possible, borrow only from trusted banks or NBFCs with transparent and clean terms. The fourth one, that's the home loan tenure trap. Buying a home is one of the biggest dream for Indian families. You know that, right? But do you know how much you actually pay if you take a 30-year loan? A 50 lakh rupee loan at 8% interest rate for 30 years, you don't just pay 50 lakh, you pay 83 lakhs more as an interest alone. That means the home loan which you had for 50 lakh, you actually end up paying around 1.32 to 1.35 crores. Most people don't even realize this when signing the papers. They focus only on monthly EMI and their affordability, not the long-term cost. And what's the solution? You can increase your EMI by just increasing a single sum of 5,000 rupee extra per month, which can reduce your home loan tenure by around 10 years. Make prepayments whenever you get a bonus or any extra income. Negotiate for lower interest rate if your CIBIL score is good. How to avoid the loan traps? See, I'll give you some practical solutions over here. Borrow only if absolutely necessary. Take loans for assets and not liabilities. Buy a house, invest in education, or start a business. Don't take loans for vacations, my dear, or any gadgets. Always read the fine print. Many people sign loan agreements without reading. Later, they are shocked by high hidden fees. Always check processing charges, prepayment penalties, or the foreclosure costs and all. Pay more than the minimum due. If you have a credit card, never just pay the minimum due. You will get trapped in never-ending debt cycle. Check your credit score before taking a loan. Higher CIBIL score means lower interest rate, and check these before applying, not after applying. Create an emergency fund of at least 6 months. Whatever are your 6-month expenses, take that as an emergency fund. Save that into the FD and never touch that. Consider loan restructuring. If you are struggling with repayments, talk to your lender about restructuring the loan to make it more manageable. Seek professional advice from your financial advisor. Consult the financial advisor before taking any large loan to understand the long-term implication and the liabilities. Track your spending. Use budgeting apps to monitor your income and expenses to avoid unnecessary debt. You know what? Loans can be powerful, but only when used wisely. Don't let them control your financial future. Which loan mistake have you made before? Comment below. I read all your comments. If this video have helped you, hit the like button and subscribe. Share it with your friends. You might save someone from making a costly mistake. And remember, smart money decisions today will lead to financial security tomorrow. See you in the next video.